Warren Buffett pours $1 billion into steel. That's the headline everyone missed while obsessing over his Apple trades. But here's what they don't tell you. This isn't about steel at all. It's a hidden AI play so massive that Buffett got special SEC permission to keep it secret for months while he accumulated his position. And if you think this is just another boring value stock play, you're about to be shocked. Because what Buffett actually bought is a backdoor into the $7.9 trillion AI infrastructure boom that's about to reshape every real estate market in America. I'm talking about property values jumping 78% in 1 year, entire counties seeing their tax base double, and investment opportunities most people won't recognize until it's too late. Stay with me for the next 30 seconds because we're going to show you exactly what Buffett saw that nobody else is talking about. And more importantly, how you can position yourself in the 3 markets where this is happening right now before the mainstream catches on. In April through June of 2025, Berkshire Hathaway accumulated a massive position in Nucor Corporation, ticker symbol NUE, investing $857 million to secure approximately 3% of the company. This wasn't announced until August 14, 2025, when Berkshire's quarterly 13F filing hit the SEC. The investment was one of 3 mystery stocks Buffett kept hidden while building his position. Nucor isn't your grandfather's steel mill. This is North America's largest steel manufacturer and recycler, producing approximately 25% of all raw steel in the United States. They use electric arc furnace technology, mini mills that recycle scrap metal with less than 1/3 the carbon emissions of traditional blast furnaces. 6 major capital projects are nearing completion, including a rebar micro mill in North Carolina and a melt shop in Arizona. But here's what makes this investment fascinating. Buffett didn't just buy steel. He invested $1.8 billion simultaneously across 3 construction-related companies. $857 million into Nucor for steel production, $800 million into Lennar, and $191.5 million into D.R. Horton, the nation's 2 largest home builders. This coordinated bet signals something massive brewing in construction and materials. The timing is everything. Steel prices climbed from approximately $750 per ton in 2024 to $814 per ton in October 2025. Nucor traded at just 13 times forward earnings compared to the S&P 500's 22 times multiple. A classic Buffett value play on a quality business at a reasonable price. And unlike his disastrous 2006 POSCO steel investment that got crushed in 2008, Nucor has a 52-year track record as a dividend king with consecutive annual dividend increases since 1973. Here's what Buffett knows that the average investor doesn't. The artificial intelligence revolution isn't just a software story. It's the most steel-intensive infrastructure build-out since the railroad boom. Global investment in AI data center infrastructure will hit $600 billion in 2025 alone. Microsoft is spending $80 billion this fiscal year, over half in the United States, building AI-enabled data centers. Meta announced a $10 billion Louisiana facility spanning 4 million square feet, the largest data center globally. Google, Amazon, and Oracle are committing similar astronomical sums. The total? McKinsey projects $5.2 to $7.9 trillion in global data center investment by 2030. Every single one of these facilities is a steel monster. Data centers require structural steel for building frameworks and column-free data halls with expansive spans. They need steel server racks and enclosures for thousands of machines. Cooling systems demand steel piping, heat exchangers, and HVAC equipment. Power generation requires steel generator housings and transformer structures. Cable management systems, security infrastructure, backup power systems, all steel-intensive. Industry experts estimate that 20 to 30% of total data center construction costs go directly or indirectly to steel products. When you're building a $1 billion data center, that's $200 to $300 million in steel alone. With $600 billion in construction spending this year, we're looking at potentially $120 to $180 billion in steel demand from this sector annually. The American Iron and Steel Institute notes that infrastructure demand increases by approximately 5 million tons of steel for every $100 billion invested. Apply that ratio to the projected $5.2 trillion in data center construction through 2030, and you get a staggering 260 million tons of cumulative steel demand. In the accelerated scenario with $7.9 trillion in investment, that number jumps to 395 million tons. Laura Hodges, steel market consultant at MEPS International, puts it bluntly. Data center construction has more than tripled over the last 3 years in the U.S. Steel companies that are successful will benefit the most from this extraordinary growth expected through at least the end of the decade. Nucor clearly got the memo. In 2024, they acquired Southwest Data Products and created a dedicated data systems business unit specifically to capture this market. They recognized what Buffett later confirmed. Data centers represent a strategic growth market for American steel producers over the next decade. Please take 2 seconds to help me out and hit the like and subscribe if you find this video interesting so far. Each like, subscribe, and share helps support this channel and keeps us motivated to keep making you great content. Thank you. Now, let's continue. The construction numbers are mind-boggling. U.S. data center construction reached a $40 billion monthly run rate in June 2024, up 69% year over year. There are currently 8 gigawatts of data center capacity under construction in the United States, 10 times the volume from just 5 years ago. Northern Virginia alone has 5.9 gigawatts of planned capacity. Phoenix has 4.2 gigawatts. Dallas-Fort Worth adds another 3.9 gigawatts. Each gigawatt of capacity represents billions in construction spending and millions of tons of steel, rebar, and fabricated metal products. And unlike typical commercial real estate cycles, data center construction is accelerating, not slowing down. Primary markets show record low vacancy rates of just 1.9%, with 74.3% of capacity under construction already pre-leased. This isn't speculation about future demand. It's happening right now, and it's just the beginning. While Buffett positioned himself in the steel supply chain, there's an even more direct opportunity for everyday investors and home buyers, the communities where these data centers are being built. Let us show you what happens when data centers arrive in your town, starting with the most dramatic example in America, Loudoun County, Virginia, also known as Data Center Alley. Loudoun County is ground zero for the data center explosion. With 199 operational data centers and 117 more in the pipeline, this single county accounts for 13% of the world's total data center capacity. And the real estate impacts are absolutely staggering. From 2024 to 25, commercial data center property values in Loudoun County increased 78.7% in 1 year, from $23.7 billion to $42.3 billion. Read that again, nearly 80% appreciation in 12 months. But it's not just commercial property. Residential single-family homes in developed areas appreciated 7.34% annually, with average home prices reaching $983,625 in 2025. Data centers now represent 23% of the county's total tax base and generate nearly 50% of all property tax revenues. Personal property tax revenue from data center equipment purchases exploded from $60 million in 2013 to over $800 million in 2026. The county's overall tax base increased 19.5% to $170.5 billion. Here's the beautiful part for residents. Despite this massive increase in property values, the county's tax rate actually decreased from $1.14 per $100 of assessed value in 2016 to 80.5 cents in 2025. Data centers pay enormous taxes but require almost no services, no schools for children, minimal police or fire department calls, no road congestion from employee commutes. But Loudoun County is just one example. Let's look at Columbus, Ohio, where Amazon Web Services announced over $10 billion in data center investments. The region saw data center space increase 146% over 10 years, with 120 of Ohio's 188 data centers concentrated in the Columbus area. This created 15,300 jobs and contributed $3.6 billion to Ohio's GDP in 2023. Total annual employment increased 23%, while labor income jumped 47% from $3 billion in 2017 to $4.4 billion in 2021. In Mesa, Arizona, Meta's data center investment exceeded $1 billion just in the first phase, creating 1,500 to 2,000 construction jobs at peak and over 200 permanent operational positions. Google added another $600 million facility. Data centers now support 81,000 plus jobs statewide and contributed $863 million in state and local taxes in 2023. The employment multiplier effect is powerful. Each direct data center job supports 6 to 7.4 additional jobs elsewhere in the economy. Nationally, data center employment grew 60% from 306,000 workers in 2016 to 501,000 in 2023. And when you count all the related jobs in construction, maintenance, security, and support services, total data center-related employment reached 3.5 million jobs by 2021. Smart investors aren't chasing Loudoun County anymore. Land there trades above $4 million per acre. The real opportunity is identifying the next data center hotspots before property values explode. Here's your investment roadmap based on confirmed developments and market indicators. The Dakotas are emerging as major players. Applied Digital is building a $3 billion 280-megawatt AI factory near Harwood, North Dakota, breaking ground in September of 2025. They're considering an even larger $10 to $16 billion project east of Toronto, South Dakota. Why the Dakotas? Low-cost abundant energy, massive land availability, and a stable climate that reduces cooling costs. These are classic Buffett-style advantages, structural benefits that compound over decades. West Texas is the sleeper market. Abundant renewable energy from wind and solar, underutilized power infrastructure, and low land costs make this region perfect for hyperscale data centers. The Stargate joint venture between OpenAI, SoftBank, and Oracle is evaluating multiple Texas sites for what could be a $500 billion initiative. Columbus, Ohio remains in expansion mode. Amazon's $10 billion commitment triggered American Electric Power to invest $2.82 billion in transmission infrastructure. When utilities commit billions to upgrade the power grid, that's your signal that more data centers are coming. Ohio offers forward-looking public-private partnerships and incentives, positioning it as a long-term growth market. Phoenix and the broader Arizona market continue attracting development despite growing community resistance. Arizona Land Consulting purchased 160 acres in Buckeye for $22 million to develop up to 3.5 million square feet of data center space. Nova Data Centers and EdgeCore Digital both have major campus developments underway. North Carolina's Charlotte and Raleigh are seeing construction activity surge with declining vacancy rates. The state offers fiber connectivity, reasonable power costs, and proximity to major population centers. How do you identify the next hotspot before everyone else? Watch for these leading indicators. First, utility company expansion announcements. When Dominion Energy increased data center power capacity from 21 gigawatts in July 2024 to 40 gigawatts by December 2024, an 88% increase in 6 months, that screamed buy real estate here. American Electric Power's $2.82 billion Ohio transmission investment is another massive signal. Second, large land acquisitions of 100-plus acres near substations and high-voltage transmission lines. Data center developers and tech companies engage in land banking years before breaking ground. When you see these transactions, residential property within 10 to 30 miles typically appreciates significantly over the following 3 to 5 years. Third, state and local tax incentive packages. When governments create data center-specific tax exemptions, property tax abatements, and expedited permitting, they're essentially advertising, "We want this industry here." Follow the incentives to find the growth. Fourth, fiber optic infrastructure buildouts. Data centers require massive fiber connectivity. When telecom companies invest in dark fiber routes and carrier-neutral facilities, data centers will follow. If you're a home buyer or residential real estate investor, here's how to position yourself. For first-time home buyers, consider purchasing in secondary markets like Columbus, Ohio, or emerging markets like the Dakotas before full appreciation kicks in. A $300,000 home today in a confirmed data center growth corridor could be worth $350,000 to $400,000 in 3 to 5 years based on Loudoun County's residential trajectory. You get a place to live and you build wealth simultaneously. For real estate investors, focus on residential properties within 10 to 30 miles of announced or planned data center campuses. Avoid the immediate vicinity. Most data centers are in industrial areas with limited residential appeal, but target surrounding communities where data center employees and construction workers will live. Look for single-family homes, duplexes, and small multifamily properties to capture rental demand. The math is compelling. In Loudoun County, residential property values increased 12% from 2023 to 2025, with single-family homes appreciating 7.34% annually. Apply that to a $400,000 investment property, and you're looking at $29,360 in annual appreciation plus rental income. Compare that to stock market returns with similar or lower risk profiles. For stock portfolio investors, you have multiple angles beyond buying Nucor directly. Data center REITs offer the most direct exposure. Equinix, trading under ticker EQIX, has delivered 122% returns from 2015 to 2025, with 86 consecutive quarters of revenue growth, the longest streak in the S&P 500. Current dividend yield sits at 2.41%. Digital Reality Trust, ticker DLR, returned 162% over the same period, with a 2.81% dividend yield and 300-plus facilities across 50 metros globally. These REITs are required by law to distribute 90% of taxable income as dividends, providing steady income while participating in the sector's growth. They're relatively recession-proof due to long-term tenant contracts with tech giants. McKinsey recommends a 2 to 3% portfolio allocation to data center REITs given the structural growth drivers and higher yields than traditional real estate. Construction and engineering stocks offer explosive growth potential. EMCOR Group, ticker EME, has delivered 820% returns over 5 years and 1,300% over 10 years. They're a primary contractor for hyperscale data center construction, with projections showing 17% earnings growth and 15% sales growth in 2025. When you've got $600 billion in annual construction spending and only a handful of companies capable of building these facilities, those contractors print money. Utility stocks in data center regions provide defensive dividend-paying exposure. Southern Company and Duke Energy both offer 3.46% dividend yields with strong growth prospects as data center power demand doubles by 2028. Black Hills Corporation, a dividend king with 4.56% yield, operates in the Dakotas right where Applied Digital is building billions in facilities. The less obvious play is steel stocks beyond Nucor. While Buffett chose NUE, Steel Dynamics and Cleveland Cliffs also benefit from data center construction demand. However, Nucor's electric arc furnace technology and dedicated data center business unit make it the pure play on this trend. For aggressive investors with larger capital, consider land investment near power infrastructure. Parcels of 50 to 500 acres with proximity to substations and fiber connectivity have shown 5 to 10 times appreciation in optimal scenarios. Loudoun County land values went from less than $400,000 per acre to over $4 million per acre near power infrastructure. This requires specialized knowledge and local intelligence, but the returns can be extraordinary. Private equity firms are raising billions specifically for data center development. If you're an accredited investor, partnerships and structured credit in this space are generating mid-teens returns with downside protections. BlackRock, Blackstone, and KKR have all launched multi-billion-dollar data center funds. Warren Buffett's steel investment isn't about steel. It's about being positioned at a critical choke point in the infrastructure supporting the AI revolution. Steel is to data centers what railroad tracks were to westward expansion, the essential material that makes the whole thing possible. The numbers are staggering. $600 billion in annual construction spending, 260 to 395 million tons of steel demand through 2030. $5.2 to $7.9 trillion in total infrastructure investment. Communities hosting data centers are seeing property value increases of 7 to 78% annually, depending on property type. Employment in the sector grew 60% in 7 years, while related jobs expanded to 3.5 million workers. But the opportunity window is narrowing. Loudoun County already saw the massive appreciation. The Dakotas, West Texas, Ohio, and North Carolina are where the next wave is building. Real estate investors who identify these markets before full appreciation capture outsized returns. Stock investors who allocate to data center REITs, construction companies, and utilities position themselves for steady growth with lower risk than tech stocks. The critical insight is this: you don't need to understand artificial intelligence to profit from it. You just need to understand what AI requires. Massive amounts of computing power housed in physical data centers built with steel, powered by enormous electrical infrastructure, and generating billions in tax revenue for host communities. Buffett made his bet in Q2 2025, quietly accumulating position while keeping it hidden from the public. He's now sitting on what may prove to be one of his greatest investments of the decade. A classic value play on an overlooked company positioned perfectly for a multi-year structural demand boom. And here's the question: will you recognize the same opportunity he did? Or will you wait until everyone's talking about it and the easy money's already been made? The data center revolution is building right now. Steel is flowing. Communities are transforming. Property values are climbing. The choice is yours. Be early or be late. But don't say you weren't warned. If you found this video interesting, please subscribe, share, and watch this one as well.